My guest today is Trading Places Research. He's a fellow essay contributor and a complete expert when it comes to AI and all the technology that surrounds it. Today, we got together to discuss the upcoming Arm IPO. Arm is a company that manufactures IPs for semiconductors. It has very large clients such as Google, Nvidia, and Microsoft. The Arm IPO might excite a lot of investors, but there's actually a lot of interesting risks to consider. Some significant issues when it comes to China. Today, Trading Places Research was kind enough to come on the show and tell us everything that we need to know about Arm, the Arm IPO, what investors should do, how to profit from this IPO. And we also got a chance to talk about Nvidia and even Tesla. If you haven't already, go ahead and check out Trading Places Research on Seeking Alpha. He has some great content there and a great investing group. And as always, I hope you enjoyed this conversation as much as I did. All right, welcome back to the show, Trading Places Research. Thank you so much for coming.
Thanks for having me.
All right, so we're going to cover a pretty interesting topic today. We have the Arm IPO coming up on Thursday, I believe.
Yes.
Companies projected to come out on the market at a valuation at about 50 billion. Is that right?
Well, the news today is they're going to try to push that up a little bit. I was counting on about 52 as of yesterday. I think it's going to be maybe closer to 55, but in that general vicinity.
Right. And of course, Arm is basically a computer chip designer. I've been doing a bit of reading about Arm and what it does. I'm going to let you do the talking here because you're the expert. Start us off just by letting us understand a little bit better what Arm does.
Okay, so Arm doesn't make chips. They license that and get royalties from it. And this all began back in the 80s when Apple needed a low-power chip to power the Newton. If anybody's old enough out there to remember the Newton, which was the original PDA, that was a big flop for Apple. But Arm was a joint venture that came out of that. And the idea has always been to keep electricity power requirements low and iterate up performance, keep pushing that up year after year, but always with the eye on keeping the power draw low. And of course, once the smartphone, revolution happens, they become very central to that. So your phone, your tablet, if you own a Mac, your Mac, your TV, your refrigerator, your car, all have Arm chips made by other companies that are based around Arm IP that they license from Arm. And so what Arm makes is an instruction set, which is the most basic level at which hardware and software talk to each other. Mm-hmm. And core designs for CPUs and GPUs built around that. And these are licensed, and most companies, with the major exception of Apple, most companies license that whole package, the instruction set plus the cores. Apple makes their own cores because they're Apple. They just license the instruction set, but all the chips Apple makes are Arm chips. Qualcomm, pretty much everything Qualcomm makes is an Arm-based chip. MediaTek, Samsung, the list goes on and on.
Right. What about a company like Nvidia? Would they be using any of Arm's technology?
They're new. Well, they were going to buy Arm, and the reason they wanted to buy them was to control the roadmap. To not just be a licensee, but control the roadmap and push it towards data center, because their new Grace data center CPU is an Arm chip. So they wanted to control that whole thing, and everybody objected. All the customers objected because Arm has never competed with their customers. They don't make chips, but that may be changing. We'll get to that in a second. So that's their business. They they keep making new versions of this IP, new versions of the instruction set, new versions of the cores. There's cores for chips that cost a penny. There's cores for data center chips that are very expensive, that cost hundreds of dollars, right? Mm-hmm. So, like I ran off that list of electronics. So all that's run by ARM chips. Last year, last year they shipped. Hold on, let me get the number right. They shipped 30. Now I can't find it. I know they've shipped 30 billion, I think it is. They've shipped 250 billion chips in the company's history. Okay, mm-hmm. It's a lot of chips. They ship. There's just a lot of going on here. It's starting to get into PCs now, starting with Apple, and Qualcomm is going to have a very good PC chip that they're going to debut in October. Mm-hmm. So that's starting as well, and something like 8 to 10% of cloud is now ARM-based CPUs. That's mostly AWS and Alibaba Cloud with their own chips, their own custom chips based around ARM cores. Mm-hmm. So they have this mobile thing. Basically, every chip that's not in a Windows PC or a data center server mm-hmm. is an ARM chip, right? Every CPU chip is an ARM chip that isn't Intel or AMD, right? And they're starting to displace Intel and AMD in their core markets, laptops and data center. Okay. So there's a real story here. There's a very real story here. But they got that way. This is a very slow revolution, right? That's taken like decades to happen. Mm-hmm. But we're kind of at a crucial moment of it. But they got that way because they let their customers make all the money.
Right.
Their licensing terms are very reasonable. Their royalties are very low. And they get that kind of volume, 30 billion chips a year, right? Mm-hmm. By not charging that much. And so they made $2.7 billion in fiscal 2022. Meanwhile, Qualcomm made, 30-something billion, right? Mm-hmm. Using their IP.
Okay.
Right? And they would like that to change, and they're getting a little aggressive about that. So the NVIDIA deal failed because so many of their ARM's customers objected to this.
Right, of course.
Because they've never competed with their own customers before. And mm-hmm. So the longtime CEO, Simon Segars, retired, and in his stead is now Rene Haas. Okay. Mm-hmm. They were a public company till 2016. SoftBank bought them in 2016 for $32 billion. I was a shareholder back then. I was pretty happy with that valuation. I thought they overpaid by a lot. They're still only making $2.7 billion a year. Right?
Right.
Even $32 billion is over 10 times sales. Right? So in that time between the 2015, the last annual we got from ARM, and the 2022 fiscal we just got in the F1, mm-hmm. That's a kind of a crucial period, and it's from peak to peak. 2015 was a peak, 2022 was a peak, right? So in that time, the number of chips shipped per year, that grew at a 13.5% CAGR, but revenue only grew at 9% a year. Mm-hmm. Meanwhile, R&D was growing at 13% a year,
Okay.
and it killed their operating margins. They went from 37% operating margin to 29%. Well, SoftBank had them.
Mm-hmm.
So they don't grow as fast as the chip growth. We know this. The chip growth was 13.5%. The revenue growth was 9%.
Mm-hmm.
And and they're losing operating margin to their substantial R&D costs in order to, make all this IP.
Right.
So they have this new CEO who came from licensing, not from the technical side, not from the tech side. And he's been really aggressive. They're suing Qualcomm. They're suing their second biggest customer right now. We're in the discovery phase, and that's due for September, next September. They're suing them over the very IP that's going to make that holds a lot of promise to push ARM chips into Windows PCs. An acquisition that Qualcomm made in 2021. A company called Nuvia, which was founded by the former head of Apple's chip unit,
Mm-hmm.
who is now running engineering at Qualcomm. A guy named Gerard Williams III, who's highly, highly esteemed chip designer. And and ARM is suing Qualcomm, and they want them to destroy all that IP because they said the license is not transferable.
Okay, so let's do a little bit of a recap there because we've covered a lot.
I know there's so much.
For anyone
we haven't even gotten to China yet. That's the craziest thing. They spent 3,500 words on China in their F1.
And we will talk about that, but just to recap for anyone who isn't very familiar with ARM and maybe not so adept at understanding the technology behind it. ARM essentially doesn't design chips, you could say. It designs these IPs, right? Which could we say that's like software essentially to an extent?
I guess it's infrastructure really. It's more infrastructure than it is software. Okay. It's the IP that underlies all these chips: Apple's, Qualcomm's, Samsung's, MediaTek, STM. I keep going.
And if I understand correctly what you've been saying, then obviously you've named all these clients that ARM has, so everyone's kind of very dependent on this infrastructure. And to an extent, would it be fair to say that ARM's achieved this kind of market share because it kind of, like you said, it prices its products very low, right? It actually
that's how they've gotten here, is that they've let their customers make most of the money, and by a lot, not even by a little, by a lot.
But that puts them now in a situation where potentially they have quite a lot of power, which I guess is maybe what's emboldening them to go ahead and pursue this lawsuit with Qualcomm. Yes,
but there's another factor, which is there's another instruction set that's open source and free, as in beer and as in speech. Anyone can use it for free and modify it however they like and use it for any purpose they like. And it's called RISC-V. And it's open source and it's free, and people are using it and got a lot of momentum last year. And Qualcomm just started a JV after the lawsuit, with a bunch of German chip companies to start making RISC-V chips, starting with automotive. But they eventually want to make a smartphone chip. And they risk pushing their customers to free. 3 or 4 German semi companies to start making automotive chips out of based on RISC-V, and then they're going to make smartphone chips based on RISC-V. I think Apple probably already has parallel designs on RISC-V or their own proprietary instruction set. But they just signed to 2040 at the old terms. They just locked in the old terms until 2040. So they're not moving. So the new thing that seems to be happening is they're going around and they want to take a piece of not every chip, but every device that's sold with an ARM chip in it, which is, like I told you, is like everything. So they want a piece of every TV, every car, every smartphone, every tablet, every Apple computer, you know.
Right, but that's not very realistic, I guess.
I don't know.
In your
That's
opinion.
what they've been floating, apparently. Qualcomm said that that's what they've been doing in their response in the lawsuit, and then subsequent reporting confirmed this, that they've been floating this, but then they re-signed with Apple under the old terms.
Right.
So I don't know. You know, Apple is their biggest customer, I think, at 12%. They said they have a 12% customer and a 10% customer. I think that's Apple and Qualcomm in that order. So they're suing their second best customer. Doesn't sound like good business to me. I don't know. I just think that's a bad idea. And it turns out, and Qualcomm's response, they said this is over tens of millions a year. Tens of millions is how they phrased it. So it's not a lot of money we're talking about. And this is Qualcomm's entire strategy going forward is based on this IP at the center of this lawsuit. And ARM's suing their second best customer. I don't get it. I don't get why they haven't settled yet.
Right, because I mean, what are Qualcomm's alternatives here then? If they just said,
well, they're going to release these chips while they're going to preview them in October at their annual event, at their Snapdragon event in October, and then they'll probably show up in devices at the Consumer Electronics Show in Vegas in January. And the trial is until September. So they're going to be out in the wild, these chips, while Qualcomm is going to be suing. I mean, while ARM is going to be suing them to destroy this IP. And they threw in a trademark, the trademark infringement for good measure, I guess. I don't know. So that's all going on. The value, I mean, anyone with a calculator can see these are some sky high valuation multiples. We're looking at like 20 times sales. And if, just looking at their best, this is at a 52 billion. This is my math at 52 billion for their best 12 months, 19 times sales, 77 times operating income, 62 times EBITDA. 46 times free cash flow. Right.
Well, they're riding that AI multiple valuation, I guess.
I guess, but they don't make GPUs. They make, mostly CPU is their business. So, but okay, so then there's ARM China.
Before we get into that, I wanted to ask though, what do you think about the timing of this IPO? What do you think the reasoning behind the timing is? Why are they IPOing right now?
Well, SoftBank needs to exit. They need cash.
Okay.
And that's another thing. They're only selling 10% of the company. Not even. Okay. Only about 1 out of 12 shares is going to be in the public float. So the stock's going to fly around a lot whenever anything's happening, because it's just not a lot of market depth there. They're still, and I think they're going to do what Intel's doing with Mobileye, which Intel sold 7% of Mobileye initially, and then just this past June they sold another 5%, and they're going to keep doing that. The public float rose by 81% when they sold that 5%. Right. And the same kind of thing's going to happen with ARM. You have 10 of their customers taking an average of I think they're all putting in like altogether putting in like 800 million.
Mm-hmm.
Arm's only raising like $5 billion total a year,
Mm-hmm.
or SoftBank is more specifically. SoftBank's only raising 5 billion. They're holding on to the rest of it because they want more money for it because they paid 32 billion,
Right.
and it's not a great return.
Mm-hmm.
So they think the price will be higher, soon. So they need to exit. They wanted to exit to Nvidia,
Mm-hmm.
and that didn't work out. And so they're doing this.
Mm-hmm.
And I think the timing is just this is as soon as they thought it was worth doing because of
Right.
the general macro environment. I mean, if you look at any of the investment bankers, you see how poorly they're doing with their M&A right now and their
Mm-hmm.
IPOs and all that. There's just nothing happened. So this is kind of the beginning. We also got whatchamacallit, Instacart, right?
Mm-hmm.
Just right after we got the Instacart S1. That's also okay. They did a nice cleanup job. They cleaned that up nicely. But anyway, so you wanted to talk about anything else before we go to Arm China?
Yeah, just so here's my question then, because I'm assuming then there's a lot of the people buying the ARM shares would be potentially some of the customers, right? Companies like Google, Nvidia might be buying up
Not
some of
Google,
these
not
shares.
Google, but the full list is. Let me think. Okay, Apple.
Mm-hmm.
Everyone but Qualcomm. It's basically everyone but Qualcomm. Apple, Samsung, Cadence Design, Synopsys, MediaTek, Nvidia,
Right. So
Intel, AMD.
I guess my question
That's
would
eight.
be, doesn't this kind of fly in the face? I mean, if suddenly you have all the customers potentially owning part of the company, doesn't that kind of fly in the face of this new strategy whereby they're actually trying to squeeze the customers more? Isn't that a bit?
There's a lot that I don't understand here.
Mm-hmm.
That's one of them. That's a lot. There's a lot that I understand. I think they just wanted to, mostly these companies. This is a small investment for most of them.
Mm-hmm.
They just wanted to make a show of support. I think.
Right. Mm-hmm.
It's 100 million to Apple. Seriously,
Hmm.
100 million to Samsung. Whatever.
Right. Pretty
So
negligible.
yeah, the only two smaller companies in there are Cadence Design and Synopsys. They make design tools for designing ARM chips,
Mm-hmm.
and hardware to simulate circuits, integrated circuits. So they're an important part of the whole. There's all these network effects that have built up around ARM chips over the years. There's TSM and the other foundries and those two companies I just mentioned, Synopsys and Cadence. And
Mm-hmm.
there's just, millions of software developers worldwide. It's a huge ecosystem now that they sit at the center and barely skim any money off.
Mm-hmm.
And
Right.
but that's what a lot of people are looking at. They're looking at the ecosystem and not their portion of the ecosystem.
Mm-hmm.
I think.
Right, of course. And then on top of that, we have to talk, of course, about this risk with China.
Yes. All right. So 2018, SoftBank, China, it's helpful to have a local partner in China.
Mm-hmm.
So they decide to sell off 52% of the Chinese licensing business, just the part that writes the licensing contracts and takes the money. They sold off 52% to Chinese interests, mostly to a hedge fund called Hopu Investments. They got 35%. And then the other 17% was various investment funds and the CEO, Alan Wu, who was a key figure in all this.
Right.
So just to recap, ARM had 48%, Hopu had 35%, and the remaining 17% was all under the control of Alan Wu. He only owned about 2% of it, but the rest was under his control via these investment funds, employee shares, etc. So in 2020, they found out, Hopu and Arm found out that he was out there trying to build his own vision fund and using Arm licensing terms as a carrot and stick. So he would go to people and say, well, we'll give you a good deal on the Arm licensing if you put money into my fund. And if you wouldn't put money into his fund, you couldn't license, right? So they fire him and he doesn't leave. And this can happen in China. I did not know this until this happened. That can happen in China. He had physical possession of the company seal, something called a chop. And under Chinese law, that denotes control. So he refused to give up physical possession of the chop.
That sounds quite sounds like put out of a movie or something.
It gets crazier. So Arm and Hopu sue him in Chinese courts. He sues back. That kind of goes nowhere for a while. And the implication to me is that the Chinese government is happy with that situation, that they're slow walking this, right? Then he goes totally rogue and starts selling a competing instruction set, probably filled with stolen IP from Arm, from another company that he's CEO of. And they're just, you know, Arm and Hopu are just furious. So so what happens is, and I'm not 100% clear on this, the Vision Fund sets up a new entity called acetone. Acetone is a solvent that cleans up big messes. They buy Arm's interest in the JV, which is called Arm China. They buy Arm's interest, that 48%, for a little under $1 billion. But then Arm turns around and gives that money right back to SoftBank and Vision Fund. So now I think it's acetone is a pass-through to Arm for that Arm China money. Arm retained 10% of acetone, so 4.8% of Arm China. Excuse me. So this somehow convinces the Chinese government to issue a new chop, a new corporate seal, give it to Arm and Hopu. And we think that's, you know, I wrote in my weekly newsletter, oh, I guess it's over. It's finally over. Ends with a whimper, not a bang, I think I wrote. What happens next is he still refuses to leave, hires a bunch of thugs and bodyguards, whatever, to arm up the offices. And the Chinese police have to come in and evict them all. And there's an armed standoff in the Arm China offices in Shanghai. They finally evict Alan Wu, who's still suing them, still running around selling a competing instruction set with stolen IP. And they put in place some guy, and in the Financial Times story about all this, they just blithely say, yes, he's well known he's made his whole career around transferring Western technology to China. That's who's running Arm China now. That's who's running the licensing business in China. Okay. So there's an accounting change that goes with all this too. They just gave us stuff where all the Arm China stuff was recorded in the revenue line as a separate revenue line as related party transactions. Now, because they only own 4.8%, they're going to put it into their equity pool below operating income. So I don't know how they're going to do comps even, because this was 20% of their revenue was in that related party transactions line. And even if acetone's just a pass through, all that stuff's going below operating income now. So their revenue is going to crash in their next report because it's all coming below operating income in the operating statement. So there's going to be these weird comps that require a ton of explaining once they start reporting for real.
Mm-hmm.
So just to sum up the Arm China thing, they've retaken control, but this guy is still out there selling a competing instruction set and still with pending lawsuits against them.
Mm-hmm.
To retake he still has, I think, about 15% control of about 15% of shares in the JV.
Mm-hmm.
The guy in charge, I don't know much about him except what Financial Times said, which is that he's known for transferring Western technology to China. And they have all this weird, at a minimum, have all this weird accounting, or they just gave up 18% of their revenue for nothing. I don't think that last thing happened, but I think acetone is just a pass through. They don't say this, but I think it's just a pass through. But either way, the comps are going to be crazy because of this once they report again. It's going to make no sense. And there's just going to be a lot of explaining to do for anything above earnings.
This all sounds like a complete mess. I mean,
it's such a mess. I've never seen a risk factor like this. They spent 3,500 words on it. At least that was Bloomberg's count. I didn't count it. Bloomberg did counted it for me. They said it was 3,500 words on Arm China in the F1. I mean, it totally dominates it's obvious that it dominates the document. Because there's just so much explaining that has to go on. And they don't even talk about the Arm standard.
Right, yeah. I mean,
in fact,
it's hard to believe that could happen in China. I mean, I don't know. You sort of imagine that they would have, the authorities would have good control of the situation over there, but I guess not so much.
I think the implication is the Chinese government sees this JV as a political football and a means of control, exerting some control at least, over some of the most important IP in the world.
Right, of course.
And so you got the Chinese government going to be sticking their noses into this. Who needs that? But, and then there's the issue. I feel bad for SoftBank's shareholders because they just got ripped off in this. They just lost $3 billion. They literally just handed $3 billion to the Vision Fund for nothing. Unbelievable. No, I can't even get into that. That's not even what we're here to talk about. It's so, every time I deal with any SoftBank entity, my head almost explodes. This company's unreal.
Yeah,
the way they're the people who gave us WeWork.
Right.
He told Adam Newman that he wasn't being crazy enough. Right? Adam Newman said, "I'm afraid I'm being too crazy." He says, "No, you're not being crazy enough."
Right. So
anyway, so I just think there's just all this overhang from China. I love ARM. I've been on this. I have a whole portfolio built around this ecosystem at Longview Capital. I love this whole thing, right? I think this is a huge growth story, but the valuation's ridiculous. And there's all this overhang from China and suing their second biggest customer. So I still think that'll get resolved though. Before they go to trial.
The suing or the China shootouts?
Oh, the Qualcomm thing. They have plenty of time to resolve it. It doesn't sound like we're talking about much money, really. It's more money to ARM than it is to Qualcomm. But, Qualcomm's, when it comes to these things, Qualcomm's always going to, they pull out the flamethrower always. So they're not going to back down. They're known for playing hardball with licensing terms and everything. So, that's one of the, strong part of their reputation.
Right. So it sounds like what you're telling investors right now is stay away from the Arm IPO. Would that be fair to say?
Well, I'm going to play around on day one, I think.
Uh-huh.
Just because I think there's a lot of hype around this, and there hasn't been an IPO in a while, right? A big IPO in a while. I'm going to play around on day one, but not beyond that.
How does playing around on day one look then? You
If
break
I
that
can
down
still
for
get
us?
at the open, if I can still get in, at a relatively cheap price, I'm gonna take a position and get out quickly, one way or another. I'm gonna get out quickly. I'm not gonna sit around for long with this. It's gonna move a lot on that first day. That's the one thing I can predict with some degree of assurance. That first day it's gonna fly around, because again, there just aren't that many shares out there. There aren't going to be that many shares. And if people are buying, then it's going to fly up. If people are selling, it's going to fly down.
Right.
So I think it's going to fly up on that first day.
Mm-hmm.
And then there's going to be a lot of profit taking, and I'm going to be one of those people taking profits. So that's my plan. It may not work. These things, I'm not going to dedicate a ton of money to this, but it's something that I'm going to be watching very, very close. I mean, look, I've been watching them closely, as a segment of SoftBank all these years. I check in on them I've been checking in on them every quarter since SoftBank bought them. Their reporting used to be very good on the segments, and they used to give it in dollars, pounds, and yen, because they're a UK company. So, but anyway, I've been following it, and I'm going to keep following it, and at some point I'll probably own it again, I think, but not at this value, not at this price. It's too much. It's just too much.
And also, just to kind of go back on something you mentioned before, I guess, is you made that comparison with Mobileye. Do you see then a risk that basically SoftBank, they're only saying 7%, so in the long term they can just keep kind of adding more supply of shares, which is kind of gonna put a damper on price.
This is a piggy bank. This is Mobileye is a piggy bank for Intel. This is a piggy bank for SoftBank when they need cash. Whenever they need cash, they're going to sell some shares. Right. Intel needed 1.5 billion. They sold some shares.
Right.
Intel's going to need more, so they're going to keep selling shares, and I think SoftBank's going to keep needing more. So,
absolutely. So it's going to make it a little bit difficult to just hold and profit in the long term.
Yeah, I think so. I think there's going to be, just from time to time, 4 or 5% hit for nothing, just because SoftBank needed to sell some shares.
Right. Of course. Now, while we're on our favorite subject, which is, of course, artificial intelligence, I also wanted to get your thoughts on the recent earnings of NVIDIA. Obviously, there's a lot to unpack there. And of course, there's been a lot of speculation around the internet about certain nefarious actions between NVIDIA and CoreWeave and all that stuff. First of all, just give us your breakdown of the earnings. What do you think about the latest earnings?
The most spectacular earnings I've ever seen. I mean, the most incredible 2 quarters in a row, and if they hit their mark for next quarter, their guidance for next quarter, call that 3 in a row. Here's what I'm really reminded of. I'm really reminded of early app right now, that no one can believe it's happening. It's so outrageous what's happening. No one can believe it, because it just seems so impossible, but it is happening. When you look, just Friday, the chairman of TSM said it's going to take 18 months to solve the supply chain issues on the H100 GPU. Right. 18 months to ramp to demand. Okay, that's how much bigger this is. And remember, TSM works very closely with their customers, and they build node. NVIDIA has a node just for these chips, and they planned it together with TSM, and they were off by like a factor of 3.
Mm-hmm.
So it's just it's just one of the most astounding things. I think this is an investment bubble, but it's real, but it's very, very real right now. Do we want to talk about the CoreWeave thing?
Yeah, I mean, I'd be interested in hearing your take on it for sure.
Well, the CoreWeave thing relies on adding BlackRock into it. That BlackRock made the loan and also owns a ton of NVIDIA shares. It's true they own a ton of NVIDIA shares. They also own a ton of Apple shares. They also own a ton of every company, because these are shares they own for all the ETFs they have. These are the shares they have for index ETFs. They are the beneficial owner, the official beneficial owner of these shares in trust for the ETF. So that's their. They don't own Intel. They don't have like a real beneficial ownership of NVIDIA. Excuse me. So that whole link in it, that somehow BlackRock has all this money invested in NVIDIA, so they make a loan to CoreWeave so CoreWeave can give the money to NVIDIA, is just, I see conspiracies like this all the time with BlackRock. Conspiracy theories based on the fact that people don't understand that the shares are held in trust for all their ETFs. Okay, but let's talk about CoreWeave. Who's CoreWeave? CoreWeave is a GPU only cloud service. They've had a long relationship already with NVIDIA because that's what they host. They host NVIDIA GPUs, and they've been doing this for a while. Why do they need so many NVIDIA GPUs? One might ask. Because they have a deal with Microsoft. Microsoft doesn't have enough GPU capacity, so they made a deal with CoreWeave to paste on CoreWeave's capacity to Azure. And now CoreWeave needs more for themselves. Microsoft's using all their GPUs. There you go. That's why CoreWeave needs more.
Right.
Because Microsoft's hosting OpenAI, plus all their other stuff that they have, all this Copilot stuff they're rolling out, and they don't have enough GPUs. As of a few months ago, they still had employees time sharing, like it was a university mainframe in the 1970s.
Right.
And so CoreWeave's, the reason CoreWeave was able to get the loan, they used the GPUs as the asset to back it, but the reason they got the loan was the Microsoft contract.
Okay.
That's why they got the loan. It's because they have this big contract with Microsoft that guarantees them a certain floor of revenue every year, for years to come.
So you don't feel that loan is in any way, I mean, it's definitely rare, right, to see a loan made.
I don't think rare is the word. I think never before seen. To use any sort of chip, as an okay. So they claim, I don't know the exact details, but I looked into this when it happened because it sounds so crazy that you would allow asset backing to be something that depreciates that fast. BlackRock said they took that into account. In the terms of the loan. I don't know the nuts and bolts of that, but they're not stupid. Again, it was really about the Microsoft contract, not about the GP. That was just, all right, we need an asset to back this. What are we going to use? They don't have any other assets. That's their asset.
I see.
So that's, and it's, you said rare. I mean, I don't think this has ever happened. I'm pretty sure this has never happened before because they depreciate so fast. 4 years, whatever.
Right.
So
Although,
everyone's done this accounting trick. I don't know how widely known this is. Google did it, Microsoft did it, Intel did it, Nvidia did it. Everyone did it except for Apple, I think, which is they moved the depreciation schedule on their data center hardware from 4 years to 6 years.
right. I
And
did hear about that the
shockingly,
other
all of
day.
a sudden, Google Cloud becomes profitable when you do
Yeah.
that.
Mm-hmm.
So I guess 6 years is the depreciation schedule that everyone's using now, not 4 years. But still, that's pretty fast for a loan to
Mm-hmm.
use as an asset for a loan. And I understand everyone's suspicion, but
Right.
CoreWeave
Yeah.
needs these. CoreWeave has the demand.
Mm-hmm.
You know, Microsoft's taken up all their existing infrastructure. They need other infrastructure now to sell to their other customers. So
Right. So now beyond that, let's say, okay, that's a legitimate relationship. There was also some speculation surrounding the idea that perhaps Nvidia was recognizing some revenues which it hadn't received yet.
well, that would be illegal.
Right, it
I
would.
saw that. I mean, that someone was. I saw one thread that was about somehow they were recognizing it in the service category,
Right, exactly.
and I just that would be illegal. That would. I mean, Jensen Wang is many things. He gets out over his skis all the time because he's so forward looking, and sometimes he does things that are years ahead of its time, right?
Mm-hmm.
But he's not a cheat. My God, he's never had anything close to this. It's just kind of weird that people went straight to fraud
Right. Well,
to
to be
explain
fair,
this.
there was a issue around 2017 or 18, I believe, where Nvidia got fined by the SEC for not disclosing properly how much of their revenues were coming from cryptocurrency GPUs.
They don't know. They literally don't know. They can't. They took that hit. They had to because people are complaining about it, and I'm complaining about it. But remember that they sell chips to other companies
Mm-hmm.
that make cards. They don't. They sell very few graphics cards. They
Mm-hmm.
make like a one expensive version called a Founders Edition, or they give it some name, right? But no one buys it. People
Mm-hmm.
buy it from their part. They call them partners, right? So they sell them to all of these Taiwanese companies who then make the cards. They don't know who they sell to.
Right.
They, these they're selling. These they're also selling through mostly through third parties, except for the direct relationships with the cloud service providers.
Mm-hmm.
I'm talking about the H100 now. So anyway, they don't have great visibility on their customers, and that's been a problem for them. I've never liked the way they organize that. I always thought they should make the cards, and AMD does the same thing. For what it's worth, AMD does the same thing with their graphics cards,
Mm-hmm.
And they just don't know. They really, truly don't know, and we have a better sense of it now that crypto has crashed a bit, and we see what graphics looks like. Their
Mm-hmm.
graphics, looks like, and that's still doing terribly, by the way.
Yes. Mm-hmm.
So, but that's they had to take that hit. It was fair for the SEC to do it, but they have no
Mm-hmm.
way of knowing.
Right.
What all these Taiwanese companies are selling. They sell them all
Mm-hmm.
over the place. They have no
Right.
idea.
And just wanted to address one more issue then, because we did talk about all that risk related to ARM. Do you see it with China? Do you see any kind of risk to Nvidia, since it has a substantial amount of its revenues, which kind of one way or another stem from China?
Well, Chinese companies aren't allowed to buy the H100 or the A100.
Mm-hmm.
They are allowed to buy the A800 and the H800, which
Mm-hmm.
are crippled versions of their 100 brothers.
Right.
So I don't know. I mean, if they wind up losing that as well, and that's a possibility. That's also a problem. But I just think they have so much. I think they have so much runway, say
Right.
through the end of next calendar year.
Right.
There's just I just see. I follow so many companies downwind of this. Like for example, I own this little Israeli they make equipment for semiconductor fabrication. They're called Camtech. They're very small. But what I like about them is they have this one machine that is specifically good for what's called advanced packaging. And NVIDIA's I don't want to get into what advanced packaging is, but NVIDIA's chips are made with advanced packaging. And the RAM, the memory in the H100 cards are also made with advanced packaging. Right? And all of a sudden, Camtech, this little tiny company, sells 100 of these machines in a month and a half. Well, what's that? That's insane demand for these H100s. TSM trying to ramp up. Now we find out that NVIDIA's, the big holdup is advanced packaging, and NVIDIA's going to other foundries just for taking TSM wafers and taking them to other foundries to package them,
right?
Like UMC, which is another Taiwanese foundry, and they still think it's going to take 18 months. Even bringing other capacity on from other companies, they still think it's going to take 18 months because they never demand tripled for the they're at three. TSM right now is trying to fill. They're at 1/3 of the capacity they need for advanced packaging just for NVIDIA.
Right.
So that tells you the demand that gave them all that in the data center is only 1/3 of the actual demand. Their data center performance in the reported quarter was 1/3 of the actual demand. That's what they were able to ship.
Right. So, and is that any risk to the bull thesis then? Because, NVIDIA has all this demand, but there's obviously going to be some issues fulfilling the demand, right? Could that be
I think, well, look, the fact that they're taking an 80, I think their margin, if you pull out, if you would do an adjusted gross margin without, all the others, the DNA and that kind of stuff, I think they're pulling something like an 85% gross margin on this thing, just in cash. And, that's hard to maintain. That's incredibly hard to maintain. Software is their moat, not hardware. There's other good hardware out there that can do all this stuff cheaper. But software is their moat. And I just think they got through the end of next year with this kind of crazy demand, and then we'll see what happens.
Right.
But I tend to look. The history of AI is there have been recurring investment booms and busts. The last one was in 2012. NVIDIA got that one too, but that was their old. That was before they started making these data center cards. This was their old gaming cards. But Google realized this years ago that this was a problem for them. And they started making their own infrastructure, the TPU. They just put out the new version of the TPU, the 5E, TPU 5E. The E is for efficient. Efficiency is the name of the game now. Now everyone's trying to make cheaper because it's so expensive. The clouds, the cloud instances are incredibly expensive. It's just the whole thing is unsustainable. But I think it's sustainable through the end of next year. So, but long term, there's no way they can sustain this.
Right, of course.
But also, it has to be said, they started working on this in 2005. This didn't just happen. they've been looking at this they've been trying to make this happen since 2005. So, you know, it's kind of amazing. It took all this time for it to really boom like this, but like, you know, they've been, no one else has been working the hardware side of this for as long, and the software side of it.
Well,
So,
I mean, the stock is down about 7% since it hit those highs. Is it time to buy the dip then?
I mean, I don't know. I mean, it seems like everyone, you know, Apple wouldn't go up either in those early years because everyone just kept seeing gloom and doom, you know. And I'm not sure, but I just as a disclosure, I'm an Nvidia shareholder now. You know, after it went down some, I grabbed it because, you know, this is real. This is very real. People don't want to come to grips with it, but it's very real. And I think they got a few more quarters at least of this kind of thing. So, you know, I mean, I think this is one of the most exciting stories in business because it's that, and we talked about this a lot about this last time. It's them against everybody else, including their own customers who would love to stop being customers.
Right.
You know, but they can't. They can't. So they have to dance the stick. You know, like on the same day, Google announces their new H100 instances for Google Cloud and their new TPU on the same day in the same press release, you know, at the same event. So, you know, that just shows you the issue right there. It's right there in that one press release.
Right, of course.
And those NVIDIA instances are going to be far more expensive, but also far more in demand. It's just incredible. It's just incredible.
Yeah, they're certainly in a privileged position. Now, I don't know how much time you have. I did want to discuss one more issue with you today, if that's all right. If you've got a bit of time.
I'm happy to.
Because we had some interesting news coming out. Well, not exactly today, but we did see Tesla stock jump about 10%. Following, you know, that report by Morgan Stanley, they predicting that Dojo, which is of course Tesla's supercomputer that they're using to train their AI for, you know, for the self-driving software, could add 500 billion in market value. Now, what are your thoughts there? I mean, you obviously know a lot about AI chips. Obviously, you know, kind of also very related to Nvidia because obviously they're very reliant
They're
on those
buying
H100s.
They're one of those customers. They're one of those. Yeah, Tesla's one of those customers.
So
and X hold. Well, actually, isn't it X dot? Isn't it X Holdings now? Or I don't know. I don't know who owns them all. Anyway, but I think could is the operative word there. There's a long way. Look, I'm a Tesla owner. But there's not a chance in hell I would let Elon Musk drive me around, let alone let one of his computers drive me around. I think, you know, okay, so it's an interesting thing that's happening in this shift because AI used to be a rules-based thing, right? The old way they were doing it was a rules-based thing. Stop it. When you see a red light, you stop. Right. And that's the way AI was building through about 2012 was the big shift, really, when machine learning took over. And it became, well, we just give it all this data and let the machine make the decisions. We're not going to tell it what the rules are. Maybe we'll help it after it learns. That's called human reinforcement learning. I forget. Humans reinforce the learning, right? They say, no, you got that right. No, you got that wrong. You know, that type of thing. So this shift is similar to that shift in that, you know, OpenAI can't tell you exactly why ChatGPT says what it says. They can't tell you exactly why. Because they just, in a large sense, they're just letting it go. And that's what they're talking about with this. And, you know, humans run red lights. if you're training it on humans, what humans do, humans run red lights.
Right.
Humans change lanes without looking.
Mm-hmm.
Humans don't use their turn signal. So I don't know. I don't know. My serious answer is I don't know, because it's a big step into faith. We're getting into faith here.
Right.
You know what I'm saying? Because it's not stop at a red light. If you see a red light, stop at it. It's the computer, after seeing, millions and billions of hours of video, understands that humans usually stop at red lights, but sometimes they go through them. Sometimes they speed up at yellow lights when yellow means slow, right? So I don't know.
So you're not.
It sounds dangerous. It sounds dangerous to me when people's lives are at stake.
Right, of course. So you're not letting Elon Musk drive you around, but I mean, are you going to let anyone drive you around at all?
Oh, I can't wait for Google Waymo is coming to LA soon. I can't wait to let them drive me around. I'm very excited to take a trip in that. But they do things very differently, though. They work only in very limited areas, because they have detailed 3D maps of the areas they serve. So they can only roll it out into areas where they have these detailed 3D maps. So they're doing LA now, and they're doing New York now, Manhattan. And again, limited, it's not going to be all of LA. Right. It's just going to be whatever parts. But I definitely let that drive me around. Those are safe.
Yeah, it's interesting. I was reading an article that was talking about the I guess there's some, I don't know if it's Waymo or one of the companies has some of the cars without drivers, and of course some people were taking advantage of that situation and doing some dodgy stuff inside inside the cars.
Well, they chose the worst city. Both Cruise and Waymo chose San Francisco and Phoenix as their first test. Phoenix is a great idea. There's no pedestrians in Phoenix. It's a simple grid, most of it, until you get into the hills. It's all very laid out very simply with cul-de-sacs. There's nothing weird. San Francisco has hills and weird turns and angry pedestrians, and there's a large portion of the city that just hates all tech, and another large portion of the city that will just have sex in the back seat. So, the worst choice possible for a test city, I think. They just chose it because it was, I don't know, because it's San Francisco. I don't know. It's a small city. I get that, in terms of the footprint, it's a very small city. So that part made sense. But I don't know. But I'm someone who thinks self-driving is going to be a thing. I think Elon Musk has been hugely irresponsible in the way he's rolled it out. And, when I watch these videos, I can't believe people do this. It looks like the tensest thing I've ever seen, driving around with full, quote unquote, full self-driving on. It looks so tense to sit there with your hands next to the wheel and your foot right next to the brake, looks much more tense than actual driving.
Yeah, it does. It does.
It's like, it just keeps making bad left turns. That's what I keep seeing. So,
well, it's definitely a brave new world that we're heading into with AI, and I'm glad that you took the time today to tell us a little bit more about how it all works. So, thank you very much for that.
I'm happy to do so. This was always like last time. This was fun.
Awesome. Well, again, thanks for taking the time. And we'll see how the Arm IPO pans out on Thursday. We'll see where Nvidia stock is in the next 6 months, and hopefully we can have another chat about it then.
I'd love to.
All right.
All right. Thanks.
Before we log off, where can people find you on the internet?
Oh yes, they can find me. I'm Trading Places Research at Seeking Alpha, and I run a service there called Long View Capital. So that's where they can find me. Thank you very much.
All right. Well, thank you once again for coming on, and look forward to the next one.
All right, me too.
All right. Bye, everyone. Thank you so much for listening to The Pragmatic Investor. If you're still around, I take it you enjoyed the content, so please go ahead and follow to stay up to date with all the latest episodes. Remember that I do a lot more on Substack and on Seeking Alpha, where I have a weekly newsletter, I do videos, and plenty of technical analysis. You can follow me for free on Substack, YouTube, and Seeking Alpha. Remember, James Ford, The Pragmatic Investor.